Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. We see silver dropping even lower, down 24 cents on the day at $17.83. How much lower will prices go? I have an article from Kitco titled Gold and Silver Prices Pressured by Rallying Global Stock Markets. So stock markets are still something that's going to be affecting precious metals. We know when stock markets have a lot of volatility, it helps precious metals prices, but right now, as they are rallying, it's going to definitely push prices lower. We also have the U.S. and China trade negotiations making a partial deal coming up, so this is also stuff that can affect prices as tensions ease, especially with Iran and them standing down. So a lot of things are going against precious metals, but also these things can help them rise as the tables turn. So anyways, I want to jump into this article. It's going to give some context on what's going on. Before I do, though, I want to make sure you guys understand that prices go up and prices go down. It's never going to keep going down. It will recover. This is just a small correction as it builds stability, as it builds support, a foundation underneath its feet, as prices stabilize. I don't want people to start becoming panicky, thinking that it's going to drop down to $10 and you're going to lose all your money. That's a very catastrophic mind state, and that's unrealistic. Prices will recover, so do not worry to that extent. If you are in this for the longer term, hopefully you will see that prices go up and go down, but when you look at the bigger picture, it's gradually going upwards, especially as industrial demand is needed more and more in the world of precious metals. So anyways, like I said, the link to this article will be in the description. If you could smash that like button, subscribe, I would truly appreciate it. I do post daily videos. So anyways, safe haven gold and silver prices are lower again in early U.S. futures trading Tuesday. Upbeat trader and investor attitudes, as evidenced by rallying global stock markets, including U.S. stock indexes hitting record highs overnight, continue to work against the competing asset class of precious metals markets. February gold futures were last down $6.90 an ounce at $1,543. March COMEX silver prices were last down 23 cents at $17.76 an ounce. Asian and European stock markets were mixed to weaker overnight. U.S. stock indexes are pointed towards slightly lower openings when the New York day session begins. Mild corrective pullbacks are in order on this turnaround Tuesday, following recent gains that put the U.S. stock indexes at record highs overnight. The geopolitical scene has quieted down and markedly the past few days. So geopolitical fears easing up, tensions are easing up, people are becoming more at ease, which is definitely going to hurt safe haven investments, because you know they thrive off of that fear, off of that uncertainty. Anyways, the marketplace this week is focused on the U.S.-China partial trade deal agreement that is scheduled to be signed Wednesday in Washington, D.C., like I mentioned earlier. So if this goes through, this will also ease up. But we know that these things are very wishy-washy. Who knows what's going to happen? The trade deal is expected to boost global economic growth in 2020. China Tuesday reported its exports grew by 0.5% in 2019, compared to 10% growth in 2018. So it only went up 0.5% compared to 10%. That's a huge, huge loss. As evidence with the trade war is U.S. damaging China's economy. China's imports were reported down 2.8% in 2019 compared to 16% in 2018. So that could obviously be from all of the stuff going on, you know. But anyways, in overnight news, the Chinese yuan appreciated to its highest level against the U.S. dollar since last summer, after the U.S. on Monday announced China was no longer on its list of currency manipulators. The key outside market today see crude oil prices firmer and trading around $58.50 a barrel. The U.S. dollar index is modestly up early today, which is also going to affect prices. When the dollar index is low, precious metals are high. When the dollar index is high, precious metals are low. So, and that's probably because of the U.S. trade deal, the partial trade deal going on, and things are looking good that are pegged to fiat currency. See, stock markets are pegged to fiat currency. The dollar index, all that stuff is pegged to the dollar. But gold and silver is kind of going against the grain, so when those things are going well, you can see how it could hurt precious metals. But in the longer term, if you look at the picture, these things aren't very secure, and they definitely aren't in very good positions to be lasting, especially as we look at hyperinflation and how much the dollar is worth nowadays. So anyways, U.S. economic data due for release Tuesday includes the weekly Goldman Sachs and Johnson Redbook retail sales report, the NFIB Small Business Optimism Index, the Consumer Price Index, real earnings, and the IDB TIPP Economic Optimism Index. Technically, the gold bulls have the overall near-term technical advantage, but they are fading, and the January spike high is strong chart resistance to overcome. A price uptrend is still in place on the daily bar chart, but the bulls need to stop bleeding soon. Bulls' next upside price objective is to produce a close in February futures above solid resistance at September high of $1,571. Bears' next near-term downside price objective is pushing futures prices below solid's technical support at $1,525. First resistance is seen at $1,550 and then seen at this week's high of $1,563. First support is seen at the overnight low of $1,536 and then at $1,530. So the market rating is 6.5. So gold, we see actually platinum and palladium are the ones going up. Platinum up to $2,142. So that is obviously because of the car parts. I think it's the catalytic converters that they've been using that actually replaced platinum. I talked about that in my video yesterday. But the demand for that is higher. So we obviously know supply and demand is one of the highest influencers on what prices can do. So let's go into silver now. So March silver futures bulls still have the slight overall near-term technical advantage, but are fading as a 5-week-old price uptrend on the daily bar chart has negated. Silver bulls' next upside price breakout objective is closing prices above solid technical resistance at January high of $18.89 an ounce. The next downside price breakout objective is for bears is closing prices below solid support at $17. First resistance is seen at $18 and then at this week's high of $18.13. Next support is seen at the overnight low of $17.69 and then at $17.50. So not really a lot of things going in silver's way. Right now, it doesn't mean that prices are going to go lower. We see the support lines. What's the actual support line right here? So we see resistance at $18, but we see support at $17.69 and then $17.50. So who knows if it's going to stay above that. I definitely see a lot of stability, especially last time. If we can revert back to a couple months ago when stock markets were setting record highs, gold and silver were still holding its ground. There was still a lot of stability. So that's very, very, very refreshing to think about, because when you can reflect back and see the patterns, see what's happening, it definitely shows that more than likely those things will repeat. But I definitely see a lot of support. I want to go over on Kitco News Twitter and read some of the things. Will weaker than expected payroll support gold prices? Gold to lose steam in 2020, prices to fall back to $1,400. So that's some stuff. Rocky reception for Compass Gold's initial drill results. So these are also things. Continental Gold's $1 billion takeout gets boosted. So leading indicator for U.S.-China trade is copper, gold, and yen. Gold and silver are getting roughed up by little risk aversion at present. Global debt threat will grow in 2020, and that's good for gold prices. So some other stuff on the side if you guys want to check those out if you don't follow them on Twitter. So right now, just to wrap this up, there's a lot of controversy. A lot of people that are coming in from the weaker hands or the newer investors are definitely going to be more uncertain because you haven't been investing that long into precious metals. But if you have been for a while and you're an experienced stacker, then you know that prices go up and prices go down and they go back up and they go back down. But if you can look at the overall, let's go back to this. If you can look at the overall picture, let's go to the 3-month. It's gradually going up. See, this is only the 3-month chart. Let's look at the year today. You can see that back then that was that huge spike, but you can see if a huge spike happens, a huge crash. So we need it to gradually go upwards. As long as it's gradually going upwards, then you can see that things are in play, or it's a healthy market at least. So you can look at gold right here. By the way, this is the JM Bullion chart for gold and silver. The 1 week you can see, but if you go to like palladium, things have been gradually going up. This is just the 1 week. So that's because I talked about my video a couple days ago, the demand for the catalytic converters are using, they've switched out from platinum to palladium. But anyways, hope you guys enjoyed this video. If you did, make sure to smash that like button. Also, make sure you subscribe for new, because I do post daily videos, so stay tuned for that as well. So thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.